Welcome back to Opinion Journal. I'm Mary Kissel. Markets took a dive late last week and were down again this morning. Is that a bad sign for the health of American businesses? I've got Sageworks Chairman Brian Hamilton on the line now to talk about some data that your organization collects on the health of private companies. What are you seeing in the market today?
It's interesting, Mary. Right now, for the last 4 years, we're seeing consistent growth of private companies. It's been very good. The only concern, the big picture kind of newsworthy event, however, is the growth rate of private companies has significantly declined in the past 6 months. So where the average growth rate of private companies was about 8% last year, now it's about 4%. So you really have to look at trend data, and the trend is down.
Okay, let's put up a graphic on the screen that shows you sales growth versus net profit margins. You see sales growth going off a cliff while net profit margins are up. So, Brian, talking about trends here, does this mean that this weak economic recovery is slowing down, coming to an end? Is that how I should interpret that?
Another good question. Now, look, we have to be really careful. If we look at 6, 7, 8% growth, it's not bad, but we're going down, and that's not good. And by the way, as you know, not as an advertisement, I don't want to come across the wrong way, but we track private companies in the U.S., so it's very different from GDP data that you're very accustomed to. But they're the job creators, so the trend is down, but they're still growing, so I don't want to push the panic button, you know what I mean? But you're exactly right. The trend for sales growth is down. That's always the major barometer for private companies. Yet the net profit margin is very healthy and has basically maintained. So here's what's going on with this. And we've seen this over the last 2 years. The story kind of remains the same, except for the sales growth rate, which is down. Companies are overhead resistant. And they're not just overhead resistant about employees and hiring people. They are not borrowing at the same rate they were in most previous recoveries. They're not buying stuff. They're not buying fixed assets the way they used to. So in recoveries, we want them buying stuff. We want them hiring people. We want them borrowing. And they're not really doing that. So maybe it's, once burned, twice shy. We don't know. But they are maintaining their net profit margin. You're exactly right. They've got that cash. They're generating cash flow. But they're shy about growing. And we want them growing because when they grow, they hire people.
We sure do. We want them to grow. We're going to keep a close eye on these numbers. Sageworks Chairman Brian Hamilton, thank you so much for joining us.